Hi everyone, my name is Corey Stackhouse and welcome to the Stack Enterprises YouTube channel. In today's topic, we're going to be discussing Bitcoin. What is Bitcoin? How does it work? How do you actually do transactions with Bitcoin? What are wallets and keys? What is Bitcoin versus other coins? And what is the overall impact of Bitcoin and how is it going to affect you in the future? So let's dive in. What is Bitcoin? Well, by definition, it is the first decentralized digital currency that allows for peer-to-peer transactions without the need for intermediaries like banks. So historically, context, if we wanted a little bit of background on it, it was created in 2008 by Satoshi Nakamoto. I always mess up how I say that one. Partially in response to the financial crisis and the perceived need for an alternative to traditional banking systems. Bitcoin differs from traditional currencies because of decentralization. It's not controlled by any one government or central authority, which is a fundamental shift away from how money has traditionally worked. How does Bitcoin work? Well, the blockchain is a public ledger where all Bitcoin transactions are recorded. It's maintained by a network of nodes or computers and is accessible by anyone, ensuring transparency and security. So, what are miners and what is proof of work? Well, transactions are verified by those miners, those people that have the powerful computers to solve those complex mathematical problems, which validates those transactions and secures the network to make sure that everything is valid. The first miner to solve the problem, whenever somebody raised their hands and says, hey, I want to send money from point A to point B, once they solve that problem, are rewarded with new Bitcoins. This is how the proof of work system works. So whenever there is money sent from point A to point B, again, somebody verifies the transaction, then they are compensated for doing so by the Bitcoin network itself. There is also only 21 million Bitcoin in the overall supply, meaning it is a finite resource. There is a halving that occurs every 4 years approximately. That's referring to how many Bitcoins are minted upon the completion of verifying a transaction. They estimate that in 2040, that is when all the Bitcoins should be mined. So we have quite a bit of life left in this thing. So how on earth do you send money from point A to point B? Well, let's imagine you have some Bitcoin. You're going to need a digital wallet or a piggy bank to keep that in, which is going to be stored online. So in an example here, let's assume that you have some money already in a digital piggy bank or a digital wallet online, and you want to send money to your friend who they also have a digital wallet set up online. Whenever you want to send some Bitcoin, you are actually going to raise your hand and you're going to broadcast to the world that I, Corey, want to send money to John Smith down the road because they're my friend for whatever reason. When that happens, those individuals that have the computers that are verifying the transactions on the blockchain network are going to start verifying that transaction. Once they confirm that that transaction has been verified, it's going to be added to the long list of other transactions that have been verified all the way back since the first inception of the Bitcoin, again, back onto that blockchain. So it's a long sequential list of where the money has been sent from point A to point B infinitely many times until you can work it all the way back to when that coin was minted and a miner initially mined it from the get-go. So it's like, a big public ledger for recording all transactions that, again, can be accessed by anybody in the world as long as they have access to the internet and a computer to do so. So what is a digital wallet? Like I referred to a minute ago, that online digital wallet, the piggy bank wallet, it is a software program that more or less keeps your Bitcoin safe. Now, how it keeps your Bitcoin safe is you're always going to have private keys or a password. It is something that is very, very, very important. You do not want to share that passkey with anybody in this world because essentially what you're doing, whenever you hand over that passkey, is you're saying, hey, you have access to send and receive Bitcoin from my wallet without me knowing in the future. So that is one thing I would definitely suggest you not share with anybody, would be your private keys. Because again, they could take your Bitcoin regardless of if you want them to or not once they have that password. Now, there are two different kinds of wallets. So there are software wallets. These are going to be considered hot wallets is what I think the slang is. That means it's very, very convenient. They're located on your phone or on your computer, and it's easy to send money to and from anywhere in the world as long as you have, again, the internet access and access to that wallet. Now, it isn't the safest thing in the world because if somebody, again, has access to your computer and has access to your private keys, they can send that money out when they would like. Whereas another alternative is you could look at a hardware wallet, and it's more or less going to be like a USB storage that you can, whenever you take your Bitcoin, you would upload it to your USB storage drive, for sake of an example, disconnect it from the internet and throw it in a lock safe. Well, essentially, if somebody wanted to steal your Bitcoin, they would have to have that USB storage drive plus your passkey or your passcode in order to have access to that drive. So it's an extra level of security that you can take. The downside of it is that you're not going to be easily be able to send money from point A to point B without manually going in and plugging in your USB hard drive to then re-upload your currency onto the internet to then send from point A to point B. But that is the gist of what wallets and private keys are. There are many different types of cryptocurrencies out there in this world. I like to think of Bitcoin as the first video game, the most famous character in a video game. They were the first one to be introduced. Thereafter, there have been many different currencies that have been derived or been created thereafter. So Ethereum is another popular one. You can think of Ethereum as kind of like a wizard. It can do more than just carry coins. They can create smart contracts. Why this may be applicable to you in the future is that smart contracts have been discussed in the title world. So whenever you're buying and selling real estate, there is title work done to verify that the previous owner was actually the owner before the new owner was to secure that purchase from them. That's what the title companies, as I understand it, their main objective is. With an Ethereum smart contract, that might actually make it to where in the future, for example, you have my wallet and somebody else's wallet. If I wanted to send somebody money and it goes from my wallet to their wallet, upon the completion of that transaction, the smart contract would automatically initiate the property that I was buying from that person being put into my name via the public ledger. So that's an example of how Ethereum can work out for us. Ripple, it's a super fast messenger. It's designed to send money very, very quickly across the world. Banks even use Ripple right now. So fun fact. Litecoin, it's kind of like Bitcoin's younger sibling, younger brother, if you will. Bitcoin in general takes about 10 minutes to verify a transaction. So if I wanted to send you money, for example, it would take approximately 10 minutes for that to happen. Whereas Litecoin, it would only take about 2.5 minutes. So it's a lot faster, but it might not be quite as secure as the original Bitcoin currency. Dogecoin, that's been a fun story. Elon Musk helped us out one quite a bit with all of his tweets and everything out there, but they've got a very strong community as I understand it, as in today's world. But it's another currency that was created in the midst of Bitcoin's creation. And another area of topic or another area of discussion that I want to hit on is the decentralization and the security of that. So I'm going to hit on there's no one central company, nation, country, anybody controlling the currency, which again is different from what we've been living in the world of since I've been alive, at least. So it's like there's more or less a gigantic world in the game, in this game of life that we are in, where no single player is in charge, but we all contribute to society. So cryptography, that is what cryptocurrency, the crypto in the front of the word, is derived from. Cryptography is what is used to make sure everything is staying secure. It is the protective code that protects all of the current information out there, and it is what imprints the transactions between point A to point B or wallet 1 to wallet 2. It helps keep anybody from cheating or making any fake coins out on the web, because if those coins cannot be verified as being derived from the Bitcoin blockchain network, then they're not going to be valid or received by somebody who is understanding of what Bitcoin is and how it works. Now, there are risks and rewards whenever we're talking about investing in cryptocurrency. It is a roller coaster ride, to say the least. Probably one of the most extreme ones I've seen in a long time. But with that being said, there are new rules and regulations about cryptocurrencies, and those changes can positively or negatively affect the value. So it's important to understand those risks. So what is Bitcoin's macroeconomic impact? Again, I have hit on this too many times, but it is an alternative to traditional finance, meaning we no longer have to rely on banks to verify transactions. We can trade amongst each other directly without a third-party intermediary involved. So another one of my favorite sayings that I've ever heard about Bitcoin, it is more or less an insurance policy against central banking. And I'll say that again. It's an insurance policy against central banking. Why is that? Well, if you think of the laws of supply and demand, right now with the government being able to print money on their demand, the more monies that they inject into the economy and the more money that's floating around, you will see that the cost of things will go up, inflation. So with that, let's compare home prices now to what they were back in 2020 whenever inflation happened or whenever COVID happened. And the government decided to print millions and billions and trillions of dollars to inject them into the economy. Now all of a sudden home prices are up. and people are priced out of being able to purchase those things, it's because there's more money floating around in this world. So Bitcoin, since there is a finite amount of them, that is one of those resources that is likely to perform positively or be an inflation hedge. So the more money that the government prints, the higher you should expect Bitcoin price to go, is my short version of that. So with that being said, the global impact on Bitcoin, its biggest thing is it's going to be no centralized control. You are going to not have to worry about having currency exchange happening amongst individuals. So right now we have the US dollar, we've had pesos, we have the yen, we have all these different currencies around the world. What Bitcoin could do is it could create one centralized currency. So that would be a big net positive in my eyes. But I'm curious what your guys' thoughts are. So that is the gist of what I wanted to put together in today's video. I wanted to give a brief explanation as to what Bitcoin is, how it works, what a wallet is, what are your passkeys, so on and so forth. So if you have any additional questions, please type them out in the comments below. I would be happy to help to answer those for you. My contact information will be in the bottom of this description of this video as well if you would like to reach out to our offices. I am a certified financial planner. I also do investment management along with all things insurance. So whether that is your home and auto insurance, life insurance, annuities, long-term care, Medicare, the whole 9 yards, we are officially a one-stop shop. So Bitcoin is something very, very interesting. Here's a gold nugget or a bonus that I'll throw in here with you at the end. In short, there are a lot of exchange traded funds out there like BlackRock. If you guys have seen that on the news as of the recording 11/20 of 2023, I don't believe it's official, but I haven't checked the news today. But BlackRock has filed for an exchange traded fund out there that would directly buy and sell Bitcoin inside of it. So there are going to be other opportunities for you to participate in these types of currencies as an investment or a hedge against inflation. But again, that is all for today's video. I hope you enjoyed. In the event you did receive value from this, please try to share it with a friend or family member who could also benefit from the information. Have a great day. Thanks.